central bank will not buy silver because storage is a real issue. You need to store 10, 15 times more in weight than gold. And this is not really very, very practical. Other precious metals, again, we have the same problem, which is storage. And that's why gold remains the most practical precious metal to purchase today.
Welcome to another edition of You're in Business. I'm Yusuf Gaminuddin, and I am thrilled to say that we're joined by Ryan Lehman, the CEO and co-founder of NeoVision Wealth Management. Thanks, Ryan, for making it to the program. What's your morning routine like? How do you kind of get your energy levels dialed in?
Hi, Yusuf. First of all, congratulations on your show. It has been quite some time since we've been together, so I'm delighted to be with you.
Thanks, Ryan.
So morning, first of all, my morning starts the night before. It's really sleeping before midnight, preferably around 10 or 10:30 p.m., and then waking up at 5 or 5:30 a.m. This is my routine. If I sleep later than that, then no, that doesn't cut it. And in the morning, it's really breathing, stretching, relaxing, doing a few sports moves, and then reading a bit what happened overnight. That's quite important. And then going downstairs and taking my supplements.
Okay, so is there any caffeine involved? I mean, what's worked for me recently is phasing out the caffeine on an empty stomach. I also try to keep the caffeine amount minimal. So, I used to do 2 cups of coffee. Now I'm down to like some variation of white tea. Do you do any caffeine?
So when I wake up, I take my supplements on an empty stomach and I wait roughly an hour. And then my first sip would be jasmine green tea. I love jasmine green tea with almond milk. So this is my morning drink. If I have an espresso, it's more on a social perspective when I have a meeting or something, but not really coffee.
Okay, so I'm going to ask you what supplements you're taking, just to see if there's anything, is it vitamin D or C, magnesium?
It's all of the above, plus omega-3, plus ubiquinol, plus rhodiola, plus H2. So I take in the morning 12 pills in total, which cover quite a few things.
All right, so a little bit of a biohacker. Yes, sort of on a hobby side of things. So we're going to have to meet up separately to delve into that. But you probably have to increase the amount you're taking because of the volatility we're seeing in financial markets. Is this what a growth scare looks like?
Well, the volatility has been totally expected because it's an alignment and accumulation of so many factors and so many parameters, from geopolitics to extreme debt in the US to President Trump coming back. Just his comeback is volatility on its own. I still remember in 2018, Yusuf, sitting with you in the studio, and you asked me about this, and I told you back then, well, before we open our systems to check the news or check our terminals, the first thing we used to look at was Twitter. What's the tweet overnight to see what's going to happen the same?
Yeah, and I remember the tweets would land exactly at the timing of my show. So it was the best show on the roster because, the big announcements would come sort of in that window.
100%. So 2025 is the year of volatility, I think, of breakthrough things, of tectonic shifts. It goes from Ukraine to potentially Hong Kong, big changes there. We've seen President Trump talk about TSMC taking engineers in China going in, to NVIDIA's results last night, which, to be honest, it went from not very transparent to very opaque.
And we'll get to more of the sort of stock specific calls a bit later. But first off, kind of on a sort of a big picture level, everything is negative in terms of year-to-date returns so far. Doesn't matter where you're looking, with the exception of the Dow is kind of flat, but wasn't supposed to be that way. Donald Trump, in his second run, was supposed to be the markets friendly guy. What's broken here?
It's not broken. It's still a priority for him, but it's not the number one priority. His number one priority is getting the US accounts in order. And for that, he's using tariffs, basically. The second priority is geopolitics, solving all of the tensions around the world. And he's been speaking a bit about this quite substantially. And the third priority, I think, will be financial markets. So this, in my opinion, will be a bit delayed in 2025 before we see results. So he has to solve the first two first, and mainly tariffs, because he's using tariffs as a negotiating card rather than actually imposing tariffs.
I mean, the big news is the tariff announcement of 25% on Canada and Mexico is what I'm seeing here. That's going to be implemented on March 4. And then you have China, which is going to face 10% on its products. Are you surprised by the scale and intensity of the different waves of tariffs? Because, if it was a negotiating tool, he would have gotten some concessions, but that hasn't happened. So the market's waking up to that new reality. The tariffs could be around for a lot longer.
Hasn't happened yet. I do think it will happen. What surprised me is the quickness by which China has reacted. First of all, the yuan has been weakening over the past few months, so clearly China has been preempting this. And second, DeepSeek's announcement. In my opinion, the announcement of DeepSeek, the timing is not innocent at all. They know very well that the US stock market is today relying on the 7 stocks, mainly NVIDIA. So they came up with DeepSeek. And China obviously was working on an AI solution as well. So the timing was quite convenient to when President Trump came in. As for the extent of the tariffs, no, absolutely not surprised. And I do think something will break before everyone gets on the table and negotiates.
Is U.S. debt going to be the front that breaks in 2025?
Well, today, as long as the US enjoys the US dollar as the reference currency, printing dollars, and they won't have a problem. Obviously, it's the biggest economy in the world. But they cannot continue doing what they're doing, because we've seen it across hundreds of years, even thousands of years, across civilizations. When a nation gets into that spiral, relying on its power, whether political or economic, they end up facing a downfall. So the US has to find solutions and very quickly to reverse that debt. It's costing a lot.
The other thing that's being speculated about is a potential set of Mar-a-Lago Accords. And sort of this is a play on what we saw in the 1980s, and specifically the 1985 Plaza Accord, where you engineer a dollar devaluation, striking a deal with or between the US and its major trading partners. Let's start off with how realistic you think a Mar-a-Lago Accord is.
I have difficulty seeing that, because where we have the US dollar at the moment, going for a devaluation, that would be another tectonic shift that would reshuffle absolutely everything. So would this be a solution to the US debt? Absolutely. But there's so many other factors that could affect it. I wouldn't bet on such an accord.
Okay, if it does happen, how can I or investors, how does protection work? You're in asset management. This is your specialty. What are you telling clients at the moment about, how to get through this period of volatility if there is some kind of grander financial reset globally?
So we've preempted that months ago, and it's by diversifying away from the US dollar assets, because US dollar is at the peak. Can it go higher? Yes, marginally, slightly, but that's it. We're at the peak of US dollar strength. And that's why we've diversified away into Chinese stocks, A and B, into Indian stocks, into GCC stocks, despite the peg to the US dollar. Private equity, fixed assets, and obviously gold. We see it as a hedge against US dollar. So the rise in the price of gold, in our opinion, is not only a rise in the price of gold, but also it's the weakening of the US dollar against gold. Mm. So that's how we see it.
So do you go with paper gold or physical gold here? Because
physical all the way.
Physical gold
all the way. Absolutely.
Okay, so how do you go about that? Because obviously everybody has a very limited capacity to store physical gold at home or in the office or wherever you want to keep it. So do you then rent a vault in, say, Switzerland and put the gold there? And also physical gold is slightly more expensive than buying it, say, through an ETF where you get the exposure without having to worry about the storage, or the transaction fees, which are substantial.
So this is exactly the same answer we get from some of our clients. And the answer is very simple, actually. In Switzerland, as you rightly mentioned, is an example. You can rent a vault for as little as 300 Swiss francs a year, and then you can store your gold. It doesn't really take much. So when you say this to clients are really surprised. I mean, you can put them in the safest place possible. Here in the UAE, you have storage places for gold at airports and several other places. So it's very easy. For smaller budgets, smaller investors, buying gold can actually hit two birds with one stone, which is buying gold for your loved ones. And I mean, real physical gold without the bells and whistles and stones, actual 18 karat to 24 karat gold as a gift, as jewelry. It's a fantastic investment that's not only the investment, but also pleases your loved ones. And again, this is for smaller investors, smaller budgets.
And in terms of the ETF, so you're not recommending it at all? I mean, if it's gold, it's going to be physical. Otherwise, put your money elsewhere. Is that the message?
That is the message, because you asked me what would you do if there's a global reset. In a global reset, everything is risky. Everything becomes on the table and becomes risky. Who would have imagined the Credit Suisse would go bust? Who would have imagined Lehman Brothers could go bust? So you never know in these cases. And if you want to invest in an asset, why go through layers? Okay, you can buy that physical asset on its own and store it, and it can be very safe. So this is what we advise today.
I think that's the key term. It can be very safe, because there are moments in history where it hasn't necessarily been safe, right? So in terms of what happened with Richard Nixon in 1971 with the cancellation of the direct international convertibility of US dollars to gold, that was one front. The second front was the executive order from Franklin D. Roosevelt, which forbade the hoarding of gold coins, gold bullion, and gold certificates. That was made under the authority of the Trading with the Enemy Act of 1917 and then amended in 1933, I believe. That doesn't make gold a safe thing to keep at home if there's precedent that governments can step in or kind of create legislation that puts that at risk.
In the United States, in Switzerland, I do believe this cannot happen. And if you look at the track record of Switzerland, we don't have precedents of this kind. Switzerland today remains an oasis and a safe haven if you want to store your wealth or precious metals and your assets.
And what kind of price target do you expect for gold going sort of for the remainder of 2025 and beyond that as well? Because we had a monumental move, right, in 2024 going into 2025. Do you think that most is behind us, or do you actually think, because of the shifting dynamics that we're discussing today, that there's actually still a lot more of a re-rating to come?
So all of the parameters that are behind gold prices going up are still in place. Nothing has changed. And we do think there will be even more parameters that will push gold even higher. However, for mass buying, I do suggest waiting for a profit-taking episode or volatility to buy a dip. Alternatively, and this is my strategy, which is buy on a monthly basis. So amortize and distribute the amount to be allocated to that asset on over a period of several months. But I do think that the parameters behind gold prices going up are still in place. So I still do see prices going above $3,000. We don't see where it can stop.
It still seems like a hassle for me to go buy gold and then, get it to the vault. I mean, I guess once you have a workflow, once you have a system in place, then it's pretty straightforward.
You have multiple companies where you don't have to physically go there. So you would buy gold, it's even online, and they would store it for you in the storage place. Okay. So it's buying and storage in one solution.
I want to shift now to stocks and specifically to earnings that we had out from NVIDIA. You were earlier teasing a little bit that you weren't as convinced as some of the earlier announcements, especially with the sort of rise of DeepSeek. Are any of the Max 7s worth buying today?
If you're happy with volatility and risk, potentially yes, for the very simple reason that retail investors in the US are absolutely relentless. And if the Doge solution that is done by Elon Musk distributes cash to citizens in the US, then we can see another rise, because really retail investors, I have not seen it in my career, so much inflows, buying the dip and investing into these stocks. In an absolute perspective, yes, it's senseless. And particularly speaking about NVIDIA and looking at its results, it makes me quite nervous. The change they have made to their earnings or the way they reported their earnings, particularly regarding the geography of the income where it comes from. They've done a very specific interpretation of SEC rules to change it. So it went from not very transparent to very opaque.
Okay, that's something to keep in mind. What about the evolution of asset management in the last couple of years, specifically the 60-40 portfolio, the idea that you put 60% of your portfolio in stocks and 40% in bonds? That was kind of the going mantra, and that's on life support. And I'm wondering what kind of novel ideas you are particularly fond of, right? In terms of thinking outside of the box and adapting to a new reality that's out there.
So it has plateaued, absolutely. So the potential replacement for the fixed income part would be private credit. So today, private credit is emerging as an investment to go to replace the traditional fixed income instruments that used to compose that portfolio. So that's something we advise clients to invest in today. There can be private credit funds or other forms of investing into that fixed income generating assets. Also, diversification across geographies, that's also very, very important because valuation matters. Valuation matters. And we've seen it in China. Valuation of stocks went literally down so low, there was a no-brainer to buy Chinese stocks, which is something we started 8 months ago. So geographic distribution and allocation in an opportunistic manner can also matter a lot in a portfolio.
So you're not adding any fixed income at all, or are you minimizing fixed income, so the bond part?
No, minimizing and staying particularly on the shorter end of the yield curve, because obviously, as known, the longer we go, the more duration risk we take, and the more volatile that part of the portfolio is. So it's reducing it and going to the shorter end.
I mean, traditionally, the bond part is supposed to absorb any volatility in the stock portion. Does that relationship come back to life, or do you think that's again one of those things that are going to get put to the historical records of sort of financial theory?
Well, we see potentially bonds being as volatile as stocks in 2025, especially seeing inflation potentially coming back. Tariffs, if they continue being imposed, then inflation will come back, and we can see quite a bit of volatility on rates on that perspective. So yes, relationships are off the table since 2024. We can't really speak of relationship. Look at the strength of the dollar and gold. So that relationship, which used to be in reverse, today it's in perfect correlation.
I'm wondering whether there are other commodities to add in a given portfolio. So, I mean, if gold has already had quite a big bump to the upside, do you look at the ones that didn't get the big run up? Sort of either silver or other precious metals, maybe rare earths, or maybe you go into some of the industrial metals if you think that there's enough of a sell-off that's happened. Because ultimately, if you do think that there's a growth scare, you're not necessarily going to get these metals in demand. But what about the precious ones specifically?
No, absolutely. So silver is the no-brainer asset to recommend as well. The only problem with it is its storage. The particular point about gold is one of the biggest catalysts of the increase in price of gold is central bank buying. And central bank will not buy silver because storage is a real issue. You need to store 10, 15 times more in weight than gold. And this is not really very, very practical. But silver, I think, still has some way to go in increase in price because it has an industrial application. The industrial application of silver can be a factor. Other precious metals, again, we have the same problem, which is storage. And that's why gold remains the most practical precious metal to purchase today.
I mean, the other thing that you have mentioned several times now is the opportunity that is coming along in China. And I recall the conversation we had probably about 2.5 years ago, where you were still negative at the time on China. And I look at the valuations now and what happened with Alibaba and sort of broader the China rally, the Hang Seng, and it's jaw-dropping. I mean, all the technicals got smashed, day in, day out. All the main rules were out of the water. Is it too late to jump on the sort of China euphoria train ride?
Well, again, if you draw parallels with the US, no, it's not too late for us. So we entered quite some time ago, quite a few months ago. So it's time to book some profits and reset positions. But from a relative value perspective, no, we don't think it's too late. We think there's still room for it. And we do think that China still has some announcements to make down its sleeve on the AI front and on tech, because this let's call it a war or fight that is happening across the world, is only in its beginnings. And I think both parties, they have quite a few surprises to pull out, and China included. And this could be an opportunity to ride the wave.
So how do you go about that then? Do you sort of buy tracker funds on an index level, either tech or sort of at the very top level, or do you go with stock-specific selection? What is the method here?
Yeah, it all depends on the investor and the size and the type of portfolio. For smaller investors, obviously an ETF would make much more sense. It's easier and more accessible. For bigger investors who can allocate and have financial analysis capabilities, then single stocks make more sense. And here they can diversify from USD-based stocks to yuan-based stocks, A and B shares out of China. Especially to benefit from the much lower yuan than before.
Okay, is there one name you like in particular? Could you tell us who that is and why?
I can tell you two names, Alibaba and BYD.
And the rationale behind it being?
BYD today from an EV perspective. So I've been driving an EV for more than 4 years.
Wow.
I changed
I
3
still
cars.
refuse. Okay.
BYD, so I bought it without much conviction, and I was completely blown away by the technology. It's literally something next level. So I've driven both the Swedish and the European, and now BYD. It's literally something else. Today, they are the biggest EV constructor in the world, and they have quite some way to go. If you look at the German constructors, they're falling apart at the moment. Unless they have a breakthrough from a hydrogen perspective, I think China remains the leader, especially BYD.
Yeah, I mean, you look at some of the German cars, even at the sort of premium ones, and the luxury that you would expect to be in there isn't in there. There's a lot of use of cheap plastics, a lot of different noises and rattles from all different parts of the cabin. And you see sort of a refreshing refinement in some of the China manufactured cars, which I've also experimented with a little bit. In terms of crypto, sort of the last kind of portion that we need to cover in our journey through sort of asset management ideas and what to do in a new global order. I'm wondering how much of a given portfolio, and I know it depends on risk appetite, but sort of, is it 1% of portfolio in crypto?
So again, it's very hard to say. You have the crypto hardcores, virtual assets hardcores, they go 100%, obviously. Traditional investors, most of them are a bit skeptical, and they only try with 1 or 2% just to tick a box. So for traditional investors who really believe in it and they've done their research in it and assessed the risks, then yes, a small single-digit allocation would be a good allocation, I think. Bitcoin today, as we see, has retreated. It might go below the 80,000 handle. And this is a great opportunity to buy into it. Again, if investors have done their due diligence, risk assessment, and suitability.
And how much do you own, if I may ask?
I own double digits. I have roughly 15%. Okay. I've actually done very well, not only on Bitcoin, but smaller coin as well.
Okay, 15% in sort of broad level crypto. It's not a specific particular coin, right? It's not like it's Bitcoin. So you do also altcoins, or is it just sort of the bigger ones, sort of your Ether, your XRP?
No, I've done altcoin. I've done smaller coins where I know exactly the story. I know the founders. I know their business model. I know their tech and where they're heading. And I think it makes a lot of sense. And that's why I've invested in some of these coins where they're literally quadrupled in price.
So you think now is a good time to step in broadly in all coins? I mean, obviously, if the risk appetite's right, then, you've done your research. Okay, that's great. But if you go in, do you go in now sort of with a broad approach, or do you go in with sort of Bitcoin, thinking that it's going to get included in sort of strategic reserves, kind of a bigger macro story as well?
Bitcoin is unavoidable. So more than 50% of what I own is Bitcoin. The rest are coins. But again, investors have to be very careful there. It's not about just opening an app on a mobile and just clicking buy on one of these altcoins. It's about going through the project, what it is, what's behind that altcoin, where are they going. So we've seen President Trump's coin and his wife's coin, where they went. There has to be a project, there has to be a use case, a tech behind it before actually investing in it.
I mean, for those who have not been following the Donald Trump and the Melania Trump coins, they're down, I think, around, in excess of 90% from their 52-week high, which is just jaw-dropping, because at the time it was at their high point, a lot of people came up to me and they're like, hey, should we buy into the Trump coin or should we buy into the, Melania coin? You can't go wrong. This is a straight way to make money. And I was like, you've got to do your due diligence, and this is probably not the right time to chase, a very, what turned out to be fragile, structural idea. So that's something to bear in mind. In terms of the price targets, right? So let's assume somebody gets in at 80,000. What kind of road ahead can investors expect, do you think, from what you're seeing? Is this a journey back to like 100, 120 by end of 2025? I'm not going to say, we're going to follow what ARK Invest says, right? Or like 1 million. And that call was made like a couple of years ago. But what do you think is possible?
I just want to go back in time to answer you this question to one of the early adopters of Bitcoin, CZ, the founder of Binance. If you go on Twitter, on X right now, you go to his tweets he's done in 2020, okay, 5 years ago. He made a tweet that one day Bitcoin will hit $100,000 and then it will drop to $80,000 and everyone will say that Bitcoin is collapsing. So he tweeted a few days back the same tweet, but he added a zero, that one day Bitcoin will hit $1 million and then it will drop to $980,000 and everyone will say Bitcoin is collapsing. There's no cap. Supply is limited. For Bitcoin to hit $1 million, there has to be a concrete use case for it. So today, if you own Bitcoin and you've made a lot of money, you need to convert it to a currency to buy a car, to buy an apartment. And this is the problem with it. As long as Bitcoin does not convert into the real world where you can buy assets with it, I think it's a bit hard for it to hit $1 million. But yes, I do see it above $100,000. Absolutely.
And where do you find a great convertibility? Because I understand Binance sort of reached an agreement with Vara in the United Arab Emirates. Sort of this is the virtual assets regulator. And the thinking was that now customers can put through their KYC documents, and that should allow easy movement between UAE banks and Binance. I haven't tested it myself yet. I'd be curious to hear from you where you found that sort of ease of sort of capital movement.
I haven't seen it yet. So for now, it's purely an investment, and I haven't seen the use case specifically for Bitcoin yet. Other altcoins, they do have a use case, but specifically Bitcoin, I think this is the hurdle behind it, just really skyrocketing and going to $1 million.
And then in terms of the learnings that you've taken throughout your career, I'm wondering what has been the biggest investing mistake that you've made?
The biggest investing mistake I've done in year 2000, when I went absolutely all in on tech, when internet came to be, and specifically routers. And there was one router manufacturer back then called Cisco. So when you have the internet and you have only one router manufacturer, you think this router manufacturer will go to the moon. And it went to the moon briefly. And then we know what happened. I have a Microsoft position, which I bought in April 2000, which came back to par 16 years later. And in 2016.
Wow.
So that's how long things can take to go back to par. So going all in on a specific sector or a specific stock is always a mistake, and I learned it the hard way.
Yeah, I mean, for me, it was General Electric, and it had already dropped so much. This was years ago. It dropped massively, and I thought I was getting a good deal, and then it kept going down, and I kept chasing it, and as it would unfold, it actually never really recovered. So, that was one of the lessons to learn, that the falling knife is sort of very real. Luckily, it wasn't a large amount relative to what's available. In terms of your biggest investing success, and on the other side of the spectrum, what was that?
The biggest success has been gold, surprisingly, because it's a big allocation. started sub 2000 and allocating each month. It has been the most consistent, the most successful from a risk return perspective, because I always see it from a relative perspective, not absolute. Gold has been the most successful to today.
Aren't you worried that gold though had long moments of stagnation, right? Where it didn't really go anywhere. And I'm guessing your storage costs, those are adding up as well. There's nothing really you can do with that. You kind of just have to bite into it and hold on, right?
Absolutely. It's all about underlying catalysts and parameters that are pushing and sustaining the prices of gold. As long as we have this geopolitical fight between East and West, BRICS and non-BRICS, and central banks buying gold, prices will be supported. So people have to be very much in tune of what's happening around the globe. It's really very macro analysis that has to be done in order to assess investing into gold. What I've bought until now is very profitable, is sitting right there for my children and my children's children. So I'm very happy there.
And then in terms of the possibility of inflation coming back with the vengeance, do you believe that is going to be the case going forward?
So as an economist, if I look at data over 100 and 150 years, we've never had a single spike of inflation when the first spike hits almost double digit. There's always ripple effects that come back. Add to it a sprinkle of tariffs, as we see today, and another sprinkle of geopolitical tensions, and then you get the perfect storm for inflation to come back. So will it come back for certain? We're not sure. It depends on so many things. The Fed and the Treasury have done such a fantastic work in fighting inflation without having the US go into recession that, could they pull it off a second time? Maybe. But the chances of it coming back are quite high. We've seen in England, the BOE has said inflation is coming back plus a recession. That's stagflation. So things around the world are very unstable, and I wouldn't be surprised at all seeing inflation come back.
So what would that mean for the rest of the world? I mean, apart from famine and what was the impact of rising commodity prices and people already struggling to make ends meet in sort of different corners of the world map. But I'm wondering in terms of how to offset that. Say if you're living in the Gulf and say the inflation gets exported and comes through into places like Saudi Arabia and the UAE. Do you go more into real assets? I mean, we talked about gold, but maybe there's still time to get into, say, real estate or property, right?
Absolutely. So I was going to say that real estate in the GCC is a very good investment. It's something that sometimes can offer you double-digit returns. So that's the best offset to inflation if it gets imported into GCC countries. The countries are developing, reforming. And if you ask me to choose one geography today, only one to put all of my money, I would have selected the GCC.
Okay, but for example, in Dubai, the latest report by Property Monitor says after 4 years of continuous growth, Dubai's real estate market is starting to show signs of stabilization. Do you then sort of hold off on Dubai and sort of focus more on Abu Dhabi or Riyadh or Doha? Or do you think that all of them are still a great time to get into?
Absolutely. Dubai is plateauing. We confirm that. And it was expected. You have other jurisdictions. For example, Ras Al Khaimah. So Ras Al Khaimah is an underrated emirate here in the UAE, where we're going to have quite a bit of activity upcoming, thanks to tourism and other factors. And we are seeing real estate there starting to boom. You have Abu Dhabi, certain areas as well. You have Riyadh, you have Jeddah. Jeddah is being reconstructed. So you have it's a big playground in the GCC to invest into real estate. It's not only Dubai. Dubai has been a fantastic city, but there are other places.
And would you prefer those cities over, say, a place or real estate in Europe?
100%. So I own property in Paris. Again, these are places where I grew up. It would hurt me to sell them, but if I could overcome my emotions, I would sell them and buy property here. Yes.
Okay. What about other opportunities in the Gulf? Since we're on the subject, do you play any of the recent IPOs, or do you go with some of the defensives? Run me through sort of how you can set yourself apart and bring in sort of additional income. Versus, let's say, the US and China. Let's say somebody wants to do something in the Gulf.
So in the GCC, there are two areas, apart from real estate, obviously. The first one are IPOs, but here, the duty of care is very important because some IPOs come in quite expensive, and we see a dip afterwards. So it's very important to do an assessment of the IPO before getting in to avoid that dip. We're hearing about upcoming IPOs like Etihad Airways, for example, and we're hoping Emirates Airlines one day. So the diversification play is very, very important. Another place is private investments or private equity and private credit. It feels like the whole world is coming to the GCC right now to set up. And some of these companies, they have fantastic business ideas. They have MVPs, minimum viable products, and investing into them can make quite some sense. And you can literally double, triple your money in some of these investments. Private credit offers you today around 15% return here in the GCC. So there are quite a few diversification plays that can be done to complement the global portfolio.
Ryan, you spent some time with the regulator as well throughout your career in the United Arab Emirates, and I'm wondering if you could give them a bit of advice or a recommendation on what could be changed or improved. What would that be?
When I used to be a regulator and I helped create the first funds department within the federal regulator of the UAE, after I left, the messages I got was, and they all intersect on one thing, which is pragmatism. I do think a regulator, within the boundaries of laws, obviously, has to be pragmatic. This is a region that is growing very quickly. And stopping it with, don't do that, don't do this, don't do that, don't do this, and scrutiny and lots of burden will slow down that economic growth. But again, within the boundaries of regulations and laws, a regulator who's pragmatic, all of the jurisdictions regulators are pragmatic. We see hyper growth, we see successes, and particularly homegrown successes. I don't want to celebrate when someone or a fund manager or a hedge fund has succeeded elsewhere and then came here and opened an office. This is not success for me of the jurisdiction here. A success is when a company is created from scratch and succeeds. This is when you know as a jurisdiction that you are really a successful jurisdiction.
Yeah, those are some powerful insights. I want to get to a bit of a personal segment now. What advice would you give your younger self? Financial advice specifically.
Financial advice is be a founder earlier than you've been. Don't rely on salary and being an employee and the safety of having a job. Go into entrepreneurship much, much earlier than you have done.
And how do you relax and unwind?
It's by doing many, many activities. So I play squash on Tuesdays and Thursdays. This is my cardio exercise. Wow, okay. It's fantastic. I do weightlifting 3 times a week. I do kite surfing. This is my relaxation and breathing and enjoying nature. And I'm a scuba diving instructor as well. So I teach scuba diving. It's also a place where I go down with total silence and I enjoy nature. So these are my activities.
I thought I was active. Now you've kind of raised the bar. So I gotta go and get going, as it were. You know what I dislike about the diving? As you know, I kind of dabbled in that as well. And I got my deep water license as well. But you know, the issue is that it's such a hassle to get ready and to get to the place and put on the suit, and then you jump on the boat, and then the boat needs to get out, and then, you know, by the time you're in the water, it's so much time, and it requires so much time and patience. I understand once you submerge, it's surreal, but you know, I just need a bit more practicality. With tennis, you know, you just grab the racket and you get going. You know, and with the gym, you just, you know, obviously very close, got all kinds of equipment, you can get going. So, you know, that's kind of discouraged me from doing it on a regular basis. I have to say, I haven't gone diving in a long time.
Yeah, you know, with scuba diving, if you go for just 2-3 hours, it's not worth it. But when you go on a scuba diving trip to Oman and Musandam, for example, there are many places here around to go to, and you do a 3-day trip, then it's really worth it.
Okay, so what's your favorite diving spot?
Oman, obviously Musandam.
Really, more so than, let's say, the Maldives or Bali or you know, some of the other destinations. I've been to those. You'd still say Musandam is the top one for you, or the Red Sea?
Well, because of its proximity, I can go there whenever I want. But obviously, going to Maldives is a completely different experience. Yes. Going to the Great Barrier Reef in Australia, this is a whole new world. The benchmark goes up substantially. But again, you have to travel for 24 hours.
Where's home for you, Ryan?
That's a very difficult question.
That's why I left it for the end.
I feel most home when I land in Paris and I sleep in my bed in my apartment. But slowly but surely, it's feeling less and less like home. So today the UAE is home. And my second home is becoming Switzerland, where we have a subsidiary and starting a business there as well.
Okay, and you also have a background in Lebanon, right?
Absolutely.
Okay.
I do have a background in Lebanon, but I don't go that frequently. Fortunately, it's a country that has been torn by so many things over the past 30 years that, yeah, it's quite sad.
I mean, look, I have an enormous amount of respect for two diasporas. One is, the Irish, and the other, the Lebanese. And they're incredibly powerful outside of their borders because of, the collective trauma that they've gone through over decades. And so, with other nationalities, I don't see that as much. But wherever you go, if you're going with somebody who's Lebanese, they'll immediately know, a Lebanese in the exact positions to basically either keep things going or make it work or help out. It's just remarkable, that global web. I don't know what your thoughts are on this, but this is something I can share as sort of an outsider.
No, absolutely. The Lebanese are very resilient. They want to educate themselves. They're fighters. And it's a tiny country that is torn by so many external forces from all sides, including Lebanese politicians themselves, who clearly do not want the country to be better. So seeing the Lebanese flourish and be successful around the world is something that I bow to and I respect very much. But it just gives me so much sadness. I obviously help quite a few people there who cannot sustain themselves without external help. But it's just a country that gives me a lot of sadness inside.
What's one book everybody should read in their life?
Well, a book I'm reading at the moment, it's called The 40 Laws of Love by a Turkish author, Shafak. It's based on Shams Tabrizi and Rumi, a discussion between the two. It's a very nice book that talks about marriage, about love. It really touched my heart. So it's a book I'm reading at the moment, actually. And I think every married couple should read it.
All right, I'll pick it up then. And then last question is, who would you have lunch or coffee with if you could pick anybody in the world today?
If I had to pick one, President Trump.
Okay. All right. I'll make that work, get it on the phone, and we'll see what comes out of the meeting. Ryan, thank you so much. This has been a lot of fun, but most importantly, also very insightful. So thanks again.
Thank you, sir.
That's Ryan Lamand from Neovision Asset Management.